Hello and a warm welcome to Talking Stocks. I'm Gugulethu Cele. In studio with me, I'm joined by Bryan and Hechter, both from Anchor Capital. Now today we're talking Astoria. It is a company that we have covered before on the show, but this time we're going to get a quick refresher and again the view as to how well this particular investment has been performing. Gentlemen, good to have you as always. Bryan, perhaps let's start off with you by getting a quick refresher again with regard to Astoria and again the relationship between Anchor Capital here.
Yes, Astoria is a JSE listed instrument. It listed in the end of November last year as a dual listing along with a listing on the Mauritian Stock Exchange. Astoria is, the essence behind it is building one share that gives you access to a global portfolio through the South African market. Direct equity, private equity, niche funds, etc. Anchor Capital is the appointed investment manager on this, Anchor Capital Mauritius. So we just need to disclose to the client, to the viewers and all the rest of it that we are a related party to this business. But yeah.
Exactly. Mentioning the fact that this is an opportunity to get global exposure, but through one stock. Talk to us about how this has come about and of course the attractiveness of this particular investment vehicle for ordinary South Africans like myself.
It's one of those that we saw an opportunity to bring something unique to the market. There's a lot of opportunities for guys to invest offshore, but you've got to go through a certain fund and there might be this and here you have a share. If I no longer want to own that share, I can go and sell it. And we also brought in other aspects to it that are unique, saying, right, there's an element of private equity. So now the investor into the share he can go, well, I'm not just getting the Apples and the Googles, which we have, I can get access to a private equity fund that in my own capacity I would never have been able to get access to. So we've brought a very unique aspect to it. It's a dollar denominated instrument, but priced in rands on the JSE. So we look at dollars from the investment perspective, and when the NAV is reported in dollars, but the man who's invested locally will get a rand instrument. So it gives him the exposure to the world without all the regulatory. Now I've got to take money offshore and then costs are expensive, and trying to build a diversified portfolio can get very, very expensive. Here I can go get access to that portfolio, one share, JSE, through a broker, easy done.
Exactly. Liam, if we can come to you, talk us through some of the metrics though before we get further in depth into what the portfolio actually entails, given the highlight that Bryan's provided us with.
Okay, so in terms of the metrics, the Astoria is basically the way we look at it at Anchor. It's another mandate of ours. So it's just a pool of assets that we manage based on from an asset allocation point of view, and within those different asset classes we make investment decisions. In terms of the metrics, we look at it at the business at the moment on its balance sheet. So we use a NAV calculation to sort of see our positioning. And at the moment, there's about 40% in direct listed equities. So that's literally buying shares on the New York Stock Exchange, the London Stock Exchange, and there's a holding in Japan, and there's a few holdings in Europe. So that's our listed equity component. Then we've got funds committed to some private equity businesses or some funds in Europe and the US, and then we've got quite an interesting investment in a direct property play in Eastern Europe, which we're incredibly excited about. So I don't know if the viewers are all too aware, but we own about 13% or 12% of the Astoria's assets are inside a company called Echo Prime Properties, which is currently in Poland, and it's invested in direct Polish properties, and they announced yesterday actually that they intend listing on the JSE in September. So that's very exciting for us.
Exactly. So some good news coming through there.
Yeah.
But keeping with the theme with regard to investments that are based in Europe, if we do come down to the listed equity split here, North America, Europe, the UK is also there, about 13%. We can't not mention Brexit there. Is there some kind of ripple effect that we have seen in the portfolio so far?
I think we took a bit of pain. We held a few positions, but what we did was we did have conviction in a number of them. So we upped exposure in one or two of the investments on buying on down, and we think that there was a chance for a bit of a recovery in those, so we're quite optimistic on those positions.
Any of those assets in the property space though?
No.
Well, we did own Lloyd's.
Yes.
So that being a high street bank in the UK, that was quite exposed to the property market, and we did reduce exposure to that.
But that's sorry to agree. That's the one thing I struggled with the portfolio. If we looked at the original asset split, there's still in excess of 45% of this business in cash, which is the one thing that has protected through all the volatility. So we also sit and it gives us a great opportunity to take advantage. Brexit, the world ended. Everybody thought this was going one way. And it gave us a great opportunity to increase weight in certain stocks and actually add one or two to the portfolio. And we still managed to come out at the end of the day, reasonably well off.
Mm-hmm. That's true. A significant amount of the investment, also portfolio in cash, as you've mentioned. If we do continue with the equity space and some of your top holdings, those are some companies as well that a lot of investors are quite keen on and have also seen a significant performance as well that we've covered on the show.
You've got, I mean, you can see there from an Amazon and an Apple and that sort of thing. These are some of the stocks at the moment that are going through growth or have got to a point where they dominate their industry. We've really taken a stance on this, but the equity side of things, to look at quality investments that have a competitive advantage, as well as coming through that you've got a nice grower. You've got a Johnson & Johnson there, which this is a stable multinational global business that's delivering. So we've now got access to that in the portfolio. If we go and look at an Apple, or even not so much an Apple, but one or two of the other stocks, the individual share price for an individual to go and buy that is excessively high. Here they can get access to that part of the portfolio through Astoria.
Something else you mentioned was the exposure to the niche funds. I understand about just over 3.6% of the portfolio has access to this. Give us a sense of what kind of investments and funds these are exactly.
So in terms of the niche funds, we've got a emerging market strategy that we've invested in, so about quite a small holding in that. And then some private equity funds. So just sort of trying to target a nice diversification within the portfolio. I must admit, the learning about these private equity funds, that we as Anchor Capital don't claim to be experts in private equity, and that's why we've partnered with some of the sort of most highly regarded private equity managers in the world with regards to this. So we've taken sort of some pretty interesting positions in some interesting themes throughout the world. UK financial services, that a fund has just started at pretty much, we think the right time. So they haven't invested any money yet, but they should over the next few years look to commit some capital to some sort of beaten up financial services businesses in the UK. So we think that on a medium term view that could deliver outsized returns, sure.
I'm glad you mentioned that, because it does seem as though there's a significant amount of research that's put into understanding the setup of this particular portfolio, everything from equities to the cash to the niche funds to the private equity. Gosh, sounds like there's a huge team behind making sure that this engine keeps running.
No, it's, as I say, Anchor is the investment manager on that, and Anchor Capital Mauritius is the appointed investment manager, and we do then have a consultancy agreement with the local team here, so we have got access to the Anchor team. But that being said as well, we dig into these. We're building a quality business and a quality portfolio for Astoria. We're looking and we're understanding what's going on. We're picking the best of the best here. And we have the opportunity to. This is a permanent capital vehicle. We've got time on our side and we have the ability to go and search out quality. And when we get those opportunities, it's rigorously analysed, understood, all the pros, the cons, everything else, before it actually makes it into the portfolio. We may have had one or two people going, they are not investing anything, the money is still sitting there. But this is the process behind it. We had ideas when we started and we conveyed that to the market, and some of those are actually in the portfolio now. But it takes time to get the process going and to fully understand. So we make sure that we know what we're doing and we know what's going into this portfolio, and we really have conviction in it that through time and through the medium to long term, this will give the capital appreciation that we're after.
I'm glad you mentioned that, because again, given the fact that it is a fund that was recently launched, again, is there anything that we can compare it to, or perhaps review the progress since the launch so far?
Just to qualify, that is not a fund.
Yeah.
Okay, sorry. This
is a company that's listed on the JSE, so it's just a holding company. And I think sort of viewers need to, and investors need to understand that, and that the company does have costs to run it. And we think our cost structure is incredibly competitive, because if you're going to compare that to a lot of other similar companies around the world, and even if you want to lob in the direct global equity funds that you can get exposure to in South Africa, our total expense ratio is well below that of the average. It really, to find a total expense ratio, and trust me, we did a lot of research on this, below 2% for mandates such as this is very difficult. We actually didn't come across any. So I know that, people often speak about holding companies and discounts and how they should trade. We think, listen, you know what, we've structured this incredibly competitively in terms of fees. We charge a 1% management fee, and then there's a couple of operational expenses, and as the Astoria itself gets its own scale, those operational expenses become smaller in the base, and the total expense ratio actually drops. So in terms of that, the larger the business gets, the lower the expense ratio inside the holdco. Looking around the world, you often find companies such as this trading with performance fee structures, funny sort of 2 and 20 structures, hedge fund structures. We have not opted for that. We want simplicity, we want value for money for investors, and ultimately Astoria itself is an incredibly simple business. It really is.
What will leave
from that aspect as well, just to have, when somebody is looking at this, they've got to look at it from the perspective that it's a holistic permanent capital vehicle. To go and say it's done X versus a global MSCI World or an S&P, you're not necessarily going to get a comparison here, because only a portion of the funds is allocated to a direct equity space. When you're dealing with the private equity space, we have quarterly review pricing on some of those funds. So somebody to go and say, but you've underperformed or you've outperformed, you're only looking at a portion of the portfolio. So that's one thing we need for people to bear in mind is stay tuned to the SENS announcements. We report quarterly on the company. Information is put out as and when the information is readily available, and that'll give people a better understanding of how the company is performing. And as I say, we've done exceptionally well over the last quarter, considering the volatility in the world. But people just need to understand that and have a look at it from that perspective.
Comparing apples with apples. Well, time now to get our experts' view whether to buy, hold or sell Astoria. Bryan, let's start off with you. Your view on Astoria, buy, hold or sell?
I'm actually going to defer on that exact answer, but I'm going to say that I do have conviction in the portfolio. I'm directly involved in it, and I do have conviction in the portfolio. Individual investors need to evaluate as part of their portfolio as a whole. I'm very positive on the outcome, and I'm very positive on the long-term potential of this specific share. So I'm going to leave it there that I'm very positive on it. But as I say, it falls into each individual's investor's portfolio and their risk profile and what they're looking to achieve.
Exactly. Liam, very briefly, your view?
Well, I guess that Bryan summed it up pretty well. I don't think it would be appropriate for us to be calling it a buy or a hold or a sell. I think just if we could just get the message across, this is a dollar-denominated asset or hard currency for the most part, and it should be viewed in light of that in the portfolio. It's something that offers nice diversification, and on our local market, it's an inexpensive way to get global access.
Yes.
Yep, well, we'll leave it on that note. A big thank you once more to both my guests for joining us this evening, Bryan Rudd and Liam Hechter, both from Anchor Capital, as we unpacked Astoria for you. Now, do join us next time, though, where we talk more stocks.